Hello everyone, this is Randy Rodenhouse with the Income Stacker. Today we're going to talk about private lending. We're calling this Private Lending 101, and we call it Part A because today we're going to talk about the general concept of private lending, and then in Part B we're going to give a specific example of a private loan I did up in Michigan to kind of solidify the concepts here. So let's get started. So what is a real estate private loan? It's really simply a loan from an investor to an individual or entity which is secured on real estate, right? So it's a loan secured on real estate, and typically the real estate is the collateral for the loan. Also, the loan is secured by a mortgage or deed of trust, depending on which state you're in. And, for example, let's say you're in the state of Michigan. You're going to use a deed of trust. Let's say you're in the state of South Carolina. You're going to use a mortgage. So every state's different, but you definitely want to get a security instrument to make sure as a private lender you get your money back. Number 4 is typically the loan is used to purchase the property and or rehab the property. So sometimes there's a loan just to purchase the property, and then there's sometimes a loan plus the rehab cost are part of the deal. And we're going to get into that in a second. So private lending documents required. What are the documents required for private lending? Now, I'm not getting into all the super detail, but on a high level, you have 4 basic things. 1, the note. This is a promissory note spelling out the terms of the loan, such as the interest rate, the length of the loan, the amount that you borrow, and so forth. Second is the mortgage or deed of trust. This is again, as I mentioned before, this is the security instrument which allows the lender to foreclose and get the property back if the person doesn't agree or doesn't pay as agreed, right? And then you also want to get title insurance as a private lender. Why? It protects you from financial loss sustained from defects in the title, right? So typically there's the lender's title policy and there's a owner's title policy. You as the lender will get a lender's title policy. And then of course you want to get hazard insurance, right? So if the place burns down, you have some way to get your money back. So you need to name the lender as the mortgagee. So if you're the lender, you want to be on that insurance policy as the mortgagee, or sometimes they call it the loss payee on the hazard insurance policy in case of a loss. So again, this is high level, but just like a bank would do, right? If you're lending money, you need to get these 4 things done in order to secure yourself and make sure you're protected. Other private lending requirements are personal guarantee is required by some private lenders as well. So a lot of private lending nowadays, it seems like most all of them nowadays, are requiring a personal guarantee. My opinion is it should be asset-based lending. It should be based on the asset, and therefore you only loan up to a certain loan to value, and then you're protected. Whether the person personally guarantees it, it doesn't matter to me because I will take their house back and make even more money if I'm lending at a low loan to value. However, most private lenders nowadays, the big ones, do require a personal guarantee. So you can do that, or you don't have to do that. It depends on you. Appraisal, of course, you want to get appraisal, or if you're really good at doing comparables and comps, you can do that as well. I've done that many times without an appraisal. If the loan to value was super low, if the loan to value is at 30%, I'll probably skip the appraisal because I don't really need appraisal. But a lot of times it's a good idea, it's a good practice to do, and it's typically required for most loans from most private lenders. Demonstrate and show other successful projects. So for example, when you're talking to the person that wants the loan, you got to find out, have they done other projects? Have they been successful? What areas have they done it in? How much rehab have they done? Kind of a list of the projects and show their results. Also, typically, private lenders require the purchasing the asset in an entity and not personally. Again, this is typically a requirement to avoid some issues with lending to owner occupants, right? So typically, most private lenders, again, will require them to purchase the asset in an entity, and they will loan to money will be written to that entity and not personally. And finally, the minimum FICO score. So a lot of people require a minimum FICO score as a private lender. Again, everybody's different. Every private lending person has different requirements. Typically for a fix and flip, usually the FICO has to be above 600, somewhere between 600 and 660. If it's a rental type of private loan, probably higher, above 660. But again, it depends. And you, as a private lender, or if you're going to do some private lending, you can decide the rules based on what you want. So what are the typical loan parameters? Again, this varies widely in the industry, but this is just kind of shows you what typically happens out there. So private lenders will require the following. One is a loan to value, or sometimes called the loan to after repaired value, to be at or below 70%. So for me, I'm usually 65%. I like to go up to 65%, not much higher. Sometimes I'll go up to 70 if it's a nice property in a nice area. This is to reduce the risk, right? You want to reduce your risk. In case there's a downturn, let's say the values drop, you can always get your money back. So you want to ensure that you have some equity there. You have a little cushion. So for fix and flip, many lenders will also require that the loan to cost be 90% or less. So what does that mean, loan to cost? So if you get a loan to buy the property and then you get a loan in addition to do the repairs, those two added is the cost. And then the loan to cost will be typically 90% or less. Now, some people do it 80%. Again, it's all over the map. Most people stay below the 90% mark. Some require points or origination fees, which ranges dramatically, again, from anywhere from 0 points, nothing, to 5, right? So 1 point, by the way, is 1% of the loan. So if someone lends $100,000, that's 1 point is $1,000. So if the origination fee is 1 point, that's $1,000 for a $100,000 loan. And then the interest rates, again, depends on how many points sometimes, but they range anywhere from 8 to 16. I'd say, on the average, we're running around 12% for most private loans, maybe a little higher. So let's take a look at an example to show how this works. Okay, so here we see the purchase price is $260,000. That's the purchase price of the house that needs to be rehabbed. The rehab budget's roughly $100,000, and that is the amount of money they're looking for. However, if you take that amount, which is roughly $360,000, and divide it by the $450,000, which is the after repaired value, that number is larger than our maximum 70% loan to value. Therefore, the rehabber has to bring a down payment of roughly $45,000 to get the loan to value back to the 70% or smaller. So therefore, if you take $315,000 and divide by $450,000, you get 70%. And $315,000 is derived by taking the $360,000 and subtracting out $45,000. So again, that's how the rough numbers go. In addition, in this particular example, there's a 12% interest rate. There's 2.5 points or 2.5% for the origination fee or points. In this case, the loan to cost is 87%. And how do you get this? Well, you take the $315,000, which is the loan, and divide it by the cost, which is $260,000 plus the $100,000, and that gives you roughly 87%. So let's say this particular rehabber does a really nice job. they sell the property for $469,000, which is over the appraisal, the after repaired value that they came with. And, they paid out the 6% realty fee. They have to pay out the down payment. They have to pay the loan back, right? They have to pay the origination fee and 8 months of interest. And they profit a hefty $47,000. However, you as the private lender make a little over $33,000. So that's a great thing for the private lender. Very passive. It's really a paperwork exercise, right? And making sure you get things recorded properly and make sure you're secured, as I talked about before. So again, it's a true win-win for both parties. You make passive income as the investor, and the person doing the rehab makes money as well. So with that being said, as usual, check us out at incomestacker.com for more videos and the blog. And you can definitely subscribe to the YouTube channel so you automatically get these videos sent to you by going to the link shown here. If you have any questions, email me, and we'll see you on the next video.